Okay, it's Tuesday, the 13th of December. It is just gone at 12:30. That's 7:30 in New York time. In this particular window that you can see here, I'm going to have to shift it across, but we'll start with the 4 hour, just for argument's sake. I've been studying supply and demand on the 4 hour, and kind of mixing that up with the ICT methodology, but using the ICT methodology on the lower time frames for the execution. And so I've marked out the Sunday open with the vertical line, blue line here on the 4 hour, and as you can see, we got the opening price, so time and price. As we've come into Tuesday, you can see how prices come back above the Sunday line and hit price here. So we had a lot of wicks around this area. That's not the bit I want to get across, but it's more about the supply and demand. And I've never looked at supply and demand this way before, but the candle here formed the demand, at least on the 4 hour, and it's a concept of basing candles that I've never looked at before, but makes a lot of sense when you dig into it. And adding that to the ICT methodology that I've been creating, my interpretation of it, my language, I'm coming up with a process for, first of all, understanding the direction, and then where price is in terms of supply and demand, and then working down into the low time frames to find that point of execution, time and price. So just shift along the window a bit, transition. On the lower time frame, so we came into 7 o'clock down here. It hits this this demand window that I was pointing to previously, and we have the initial low, high, lower low, which forms market maker sell model, where we got the value on either side of it. This is what was targeted. It comes down into the demand, and we get the swing low that forms by here. So if I switch on the institutional swing point stuff, you can see it marries up. We've got the marker here and the marker here, and the marker here. So these are this is the swing high, the swing low, the swing high, and the swing low. Those areas point to the areas of value on the chart. So I just switch it back off again. And as we come into 7 o'clock, you see how price hit this demand zone, and then we have immediate. This is the 1 minute immediate expansion away from that. It forms a busy just by here, buy side imbalance, sell side inefficiency. So we have the market paradigm playing out. We get the breaker, and then the retracement back down to this busy. And if we're to place a Fibonacci on here to get the OTE, price actually falls into that OTE level as well. So I was just observing it, but you can see it's behaving as it should do in terms of ICT methodology. We had the breakout, retracement back into an area of discount, and that's where the fair value gap was. So we do have another fair value gap down here, but I preferred this one because it was at that kind of 50% area, and price hadn't broken this high yet, so I hadn't confirmed the direction on that. But as it comes down to here, price hit an area of interest really. So you can see what this candle's doing right now. I am on the minute, So we'll have to see what happens, but I'm liking what I see in terms of process, and how we derive an area that we want to get in. So this is live at the moment, this specific candle, so I don't know what it's doing. I've not really looked at it so much. There you go.